Markets have slipped quite a bit in the last 15 to 20 odd minutes. We were up 65 points when we started the show, closer to the day's high, but now we're just up 28, and it looks as if the day's high is very, very far. 7,776 is the day's high. We were 5 points away from that. Last 5 minutes, Idea was down 4%. Now it's down 5.3. Hero Motocorp numbers still awaited. It's not that we have got the numbers, but it's at the day's low. Absolutely flat. It was on the positive side. Z Entertainment down about 1.3 odd percent, back to below 400. It was 400 plus since morning. Bajaj Auto is down about 0.5% or so. ONGC is also another name which is losing out. It's about 0.1% on the lower side. Tata Motors DVR, both are slightly off the day's high. Mayuresh Joshi is now joining us. Mayuresh, good afternoon. What do you make of this last half an hour selling, Mayuresh? ETF flows continue to be negative, which has been the case in the last few days, or rather visible from the FII DII number.
Afternoon, Pankaj. Again, my own take is that we will be quite hostage to what the global markets do from an immediate short-term perspective, and very few triggers that the markets are probably working into going into earnings season. So largely, I think the markets, as we discussed time and again, have just stated weak numbers to come through. The first half has been reasonably okay, but the second half of the earnings season, where PSU banks, infrastructure companies, construction companies, capital goods will start reporting numbers, I think the overall numbers will have a drag down effect. So I think the markets are probably reacting to what the global markets are doing at this point of time. Take into point cognizance of risk assets, equity being one of them. So I think this will continue for the short-term period of time unless monsoon surprises. And again, I think the expectations are largely that monsoons will be far better this year. So I think over the next few weeks at least, I think the markets will be range-bound. I think consolidation largely would be the theme, and volatility will continue for the better part of May.
Right, but overall numbers so far so good. Even in the second half, if we see a minor miss here and there, you would not be worried, right? Unless, of course, one very big company like a Tata Motor or, some big company, some company which has profitability of more than 3,000-4,000 crores essentially disappoints the street.
So again, I think companies having global exposure, I think largely it will depend on how the global cyclical recovery has been, both in terms of core commodity recovery as well as demand recovery, I think. So that will largely play into effect for a lot of these global players, specifically listed on the exchanges and specifically on the Nifty as a component. Having largely said that, my own take is that from the second half of this fiscal, you're probably working with a low base as well. So I think that is going to have a compounding effect in terms of how the earnings will pan out. Raw material prices again expected to be extremely benign, and if monsoons help, the pay commission recommendations help, a few of the reform processes that the government is doing largely get trickled down into the real economy, specifically in terms of how the money flow will happen. I think that will have a large amount of domestic consumption story getting driven up. And again, I think if the industrial demand starts coming back with the government capex largely on track, the private capex following suit in the second half, even in some bits, my own take is that the industrial recovery will also be largely evident over FY 17-18. So yes, I think we remain optimistic over that time frame. But again, as I said, largely I think till that point of time, you'll largely be driven by what global markets do, and will largely be constrained in terms of how cross-currency movements happen, which will also have an impact in terms of how equities as a risk-added class will respond.
So, the point that you made that, the overall base seems to be low now for growth next year. On a lower base, if we grow 15-18%, still investors would be happy?
So again, I think it was largely expected for FY16 that we will grow in double digits. That has probably not happened. It has got largely constrained because of all the conditions that I probably mentioned. But if one really assumes that over the next year, year and a half, or 2 years to say, the nominal GDP growth anywhere between 12 to 13%, you can largely expect inflation at the same levels or even lower. So I think the corporate earnings should grow at a reasonable pace of around 15 to 16%. And that is not a hard expectation to probably believe that the markets can deliver. So over FY17, FY18, my own take is with nominal GDP growth expectations of 12%, corporate earnings should grow at 15-16%, which should be quite reasonable for the market.
Right. What do you make of the private banks so far? Yes Bank, fantastic numbers. Axis, ICI slightly on the weaker side. How would you look at that, and also the new disclosures?
Again, the new disclosures largely are expectations from the banking side, specifically having exposure towards the corporate and the SME book. So if you've got a broad outline in terms of what can actually go bad, if the cyclical recovery does happen, own take is that not all of these assets might actually get recognized to be NPAs. Having said that, probably I think the kind of disclosures that are made, I think it provides greater transparency in terms of how the cash flows might pan out for the banks. And again, I think if you divide that over the next 8 quarters, largely I think you'll understand how the bank's performance will be. So yes, I think if one really goes by the assumptions that the banks are probably giving out at this point of time, you might have a constrained earnings picture for the better part of FY17. But again, I think it largely points out with credit growth expected to revive over the next few quarters with the low base supporting these prices, earnings growth in excess of 20-24 odd % in that range for banks, specifically on the larger retail side as well as the corporate and SME side is not ruled out. So yes, I think the larger retail-oriented banks look a better picture at this point of time. But generally, I think the private sector banks should do reasonably better over the next 1.5 years.
You know, the share that PSUs has been losing out and private sector has been gaining in, especially for the retail side. You think that will continue?
That might very well continue, and the larger PSU banks, which have a reasonable presence specifically in terms of the retail book or how the CASA ratios are even panning out for these banks, I think these banks should hold up in times, in good times. So I think once the credit growth cycle revives, when you've got a better base to work with, I think these branches already have a huge branch network with the kind of impetus that has probably got received in terms of recovery of bad loans. I think these banks are probably doing the right steps. I think with the right kind of support that they're probably receiving from the government and the RBI, if the recovery process is much faster than what the banks probably anticipate, my own take is that with the kind of valuations that these banks are deriving at this point of time, and the larger PSU banks at this one, I think the operating leverage benefits will accrue much faster to them rather than the smaller ones, because the smaller ones are still struggling with some amount of capital issues, you still start adequacy problems, and you need capital to fund your balance sheet growth. I think the larger ones really have that at this point of time. And again, I think if the market conditions support and if the macro conditions probably revive faster than one really expects, I think the larger PSU banks are looking good on both counts. I think earnings recovery will be much faster and valuations remain extremely attractive at this point of time.
Right. As far as earnings recovery is concerned, so private sector banks will continue to grow, but in PSU banks, one needs to be very selective. One has to play properly, even if they are looking to buy at these levels, which are, about 30-40% from the highs that we've seen last year.
Oh yes, that would largely be the theme, Pankaj. So even on the larger private sector banks, I think the whole point would be to probably spread your portfolio across the private sector banks. And yes, I think you have to be remaining extremely selective when it comes to the larger PSU bank.
Right. For the PSU banks, can one create a basket or, maybe buy a mutual fund which is focused on PSU?
So largely, I think if you are going through a mutual fund scheme, I think one really needs to understand from a financial advisor which scheme suits you best as per your risk profile. But if you're looking at picking stocks individually, my own take is that the larger PSU banks will still offer a much better risk-reward profile at this point of time. Though the smaller and the mid-sized PSU banks are very, very attractive in terms of valuations, the inherent problem that remains on their balance sheet is capital adequacy. Asset quality again remains a big question mark in terms of how they'll be able to protect their book. And again, I think the kind of write-offs that one really expects on the lower PSU banks or the mid-tier PSU banks, I think their impact on the balance sheet will be much larger. So I think to expect earnings recovery and earnings growth in excess of what the market might do with the mid-cap PSU banks, though valuations remain extremely supportive on their side, is I think a high conviction call that one needs to take. But I think if I have to go for a steady earnings growth trajectory over the next 2 to 3 years, I think the larger PSU banks at least offer some amount of support in terms of what they've got in terms of branch network with the kind of management support that they've got, case in point being Bank of Baroda, where a new management has probably come through. So I think one really needs to be very, very selective within this space. But the larger PSU banks is something that still offer a better risk-reward profile, in my opinion, over the next 2 to 3 years.
Right. Mayuresh, any view on iShares? I think the press conference is also starting. Any view on iShares quickly?
No, it's always outperformed, Pankaj, in terms of how Royal Enfield sales have been. I think the cyclical recovery you're seeing in the MHCV segment is aiding margins. But I think the numbers were more or less in line with what the street was expecting at this point of time. Valuations also looking a little bit stretched. But again, the company has been a consistent performer. So the management guidance on how the exports market are expected to shape.
Mayuresh, the management of Eicher Motors is speaking on their results. We'll come back to you once we hear them.
Calendar year to financial year. I will start with an update on Eicher Motor Limited's consolidated financial performance for the 15-month period ending March 31st, 2016. Eicher Motors Limited reported an all-time high total income from operations at over 15,600 crores and an operating profit of just shy of 2,000 crores at 1,995 crores, taking our EBIT margin to 12.7% and our profit after tax at 1,451 crores. So that's for the 15-month period. At a standalone level, again for the 15-month period, standalone pertaining to Royal Enfield business, we reported a total income of 6,188 crores, an operating profit of 1,593 crores, and an EBIT margin of 25.7%, and a profit after tax of 1,452 crores. So these are all our highest ever numbers that we've had at Eicher Motors. So again, as we've changed our financial reporting period from 12 months, from a calendar year to a financial year, we're going to tell you about a 15-month period, which is January 1st, 2015 to March 31st, 2016. So they're not obviously comparable like to like with the previous year 12-month period, but to provide comparable numbers, we have used the data for the last 12 months. So we've used the data from 1st April 2015 to 31st March 2016 and the corresponding previous year in order to help you in or us in the comparisons. So for the 12-month period ending March 31st, 2016, at a consolidated level, let's say the annualized number, as it were, for total income was just over 1,300 crores, which compares to 9,400 crores, or shy of that, last year. So that's a growth of 40%. So that's a comparable rate. At the EBIT level, the growth was 70%, where we had just over 1,700 crores operating profit versus just over 1,000 crores in the same 12-month period last year. And the profitability for the financial year, the EBIT margin, was 13% versus 10.8%. And profit after tax grew by 62%. So again, great growth for the 12-month period. And at a standalone level, which refers to the Royal Enfield motorcycle business, we've had an absolutely stupendous year once again. The total income has grown to 5,227 crores, which is a 56% increase over the 3,357 crores of last year. So that's the 12 months again we're talking about. EBIT stands at 1,360 crores, which is a 75% increase. And profit after tax is at 1,016 crores, which is a 66% increase from the 612 crores. And at a quarterly level, we've had a net income of 3,764 crores. We've had, which is a 47% increase, an EBIT of 531 crores, which is an 84% increase, and again, we have standalone numbers where our EBIT, our operating total income was the highest ever. That's for the Royal Enfield business at 1,545 crores and EBIT of 424 crores. So that's the 83% growth which I was talking about in the corresponding period. So with an all-time high EBIT margin, operating margin of 27.5%, and an EBITDA margin for the first time touching or in the order of 30%. So moving to numbers, we've had, of course, great sales numbers as well, where our motorcycle volumes have grown to just over 1.48 lakhs for the quarter, which is nearly a 60% growth over the less than 93,000 same quarter last year. We continue to have good order books and our strongest ever order books in terms of units as we speak. And we continue to increase our retail footprint, so lots more lovely stores for Royal Enfield. continuing to be added to our existing stock of 500 stores, most of which have been upgraded to a new retail identity, which is driving in a lot more footfalls into our showrooms. And in the last 15 months, as a part.
Markets are up about 25, 30 odd points as far as Nifty is concerned. 6 minutes in terms of closing. Not much of movement. We were talking to Mayuresh. He's still with us. Mayuresh, any view on Castrol? Very solid results came out today. It's up 6% now.
No, yes, I think the results were extremely good, both in terms of how volume growth has panned out, how the EBITDA contribution per litre has moved. But largely, I think you also should understand that the base oil prices have corrected quite meaningfully with the fall in crude oil prices that we've seen. And with some rebound that we've seen in crude prices, I think the base oil prices with the lag effect should see some amount of rebound as well. So with that aspect, I think the EBITDA margins, whether they'll hold up at the current levels and what kind of volume growth the management expects, I think it'll be very interesting from the management to understand these aspects. But yes, I think operationally the numbers were very good.
Right, but you know, something like a Castrol is like HDFC, where people don't believe that things would continue, but it tends to continue and tends to see growth.
Again, one really needs to understand the business model in greater detail, Pankaj. The automotive segment, the non-automotive segment, the automotive segment probably over the past few quarters had not done that great. But again, with expectations of monsoons picking up, you're greatly assuming that the volume growth should be largely better than what you've probably seen in the fiscal gone by. Again, on the non-automotive or the industrial part of the segment, I think with the capex recovery, I think we'll see some amount of traction happening on that front. So largely, I think the business model is skewed between these two segments. What kind of volume growth has happened over the past so many quarters? I think there is some amount of expectation that the volume growth might improve. But again, I think you need to keep in check how base oil prices move, how realizations move, how competitive pressures are probably moving in, and what kind of volume push through do these players really have within the market itself. So I think all these aspects need to be carefully studied. But no doubt about it, I think Castrol again has given a good set of numbers as I repeated earlier as well.
FNO list, generally we don't talk about it. Have you looked at the name? What's the FNO data telling you? Gaurav, any view on Castrol? It's a part of FNO series.
Well, yes, I've seen a decent amount of short covering. Some good longs are seen now getting built on an intraday basis. Difficult to say whether these will be carried over, in the same amount for the next day. But so far it looks good. And I think if it's sustaining 405, 410, the chances it may test levels of 415, 430. So if somebody wants to go long, I think have a small surplus and one can go long. There are chances that it may still move higher from the current prices.
Right. Gaurav, what's your view on DLF and India Bull Real Estate? These two names have not corrected despite markets going down. Generally, they are very high beta, tends to move with the market.
Well, they have been trading in a range. If you look at DLF or Bull Real Estate for that matter, especially DLF, it's been trading in a range. And it's showing good amount of data in the sense that you see 120 call option having the highest Y concentration and that particular strike is being held on to. So that becomes a good base. And this way, it started with 110 strike, then 115 strike, then 120 strike. So the base is shifting up, and that is the reason we are not seeing good amount of fall in DLF, even though Nifty is seeing some amount of profit booking or some amount of pressure. This being a high beta name. For Real Estate, I think it's a different in a different league. Seen a good amount of longs, significant longs seen getting built, and we have seen that for last trading sessions it has been in the band period as well. So I think there's some more room left. But fresh entry at these levels, I don't think it is advisable to hold on to these levels. Fresh entry. But if somebody is already long at lower levels, then keep riding the stock and keep trading your stop losses.
Right. Gaurav, just stay on with us. Mayuresh, request you to stay on. Markets are about to close. About a minute or so remaining for markets to close. Tata Motors was among the top losers yesterday, up about 2.5% today. Tata Steel is up 1.5%, 334. It was again one of the losers yesterday. Yes Bank 0.7% decline. Idea Cellular down about 5%. Top loser today. Very aggressive pricing coming in from RCOM. BHEL 2.8% higher. HDFC Limited up about 2.8 odd percent. ITC 1.5% higher. Infosys up 0.5%. NDPC up about 0.7. Sun Pharma 0.7% higher. ONGC down about 0.25%. Bharati Infratel down about 1.2. Coal India 0.5% higher. HCL Tech down about 0.8%. Bharati Infratel down 1.2. Z Entertainment absolutely flat. Bharti Airtel down about 2%. L&T down about 2 or up about 2 odd percent. 1274. Tech Mahindra up 3%. 480.81. Power Grid up about a quarter. Tata Motors DVR was up 0.5% or so. In fact, Tata Motors main share did particularly well. Aurobindo down 1%, 804. Wipro up about 0.8%. IndusInd Bank absolutely flat. Cipla up about 2 odd percent. Kotak Mahindra Bank down about 0.4. Gale down about 0.5%. That's the closing bell. HUL is down about 0.3%. BPCL is down about 0.7%. Lupin was good today, 1.7% higher. M&M absolutely flat. TCS also absolutely flat. Hero MotoCorp about 5 rupees higher. Maruti up about 32 rupees, getting closer to the 3850 level mark. That's the top gainer. Tech Mahindra 3% higher. When we started the 230 factor also, it was up about 475 odd levels. BHEL 3% higher, added on to gains towards close. HDFC Limited was up 3.5%. It's closing up about 3%. L&T 2.2% higher, 28.29 rupees, 1.8 million shares traded. After days, we've seen action into L&T. Tata Motors closing in slightly below the 390 mark. It opened at 395, 396, but then never really sustained that momentum. Cipla up about 1.8, Lupin up about 1.7, 1,606 rupees for Lupin, and probably, the list just goes on. As far as losers are concerned, Idea clearly not a surprise because RCOM has become very aggressive on 4G launch and a 5% decline for Idea. Adani Ports down 5%, 197, 198 for Adani Ports. Ultratech Cement down about 2 odd percent, 3,118. Bharti Airtel, Bharati Infratel down about 1.8, 1.3%. Aurobindo down about 1 odd percent. Asian Paints down close to about 1% or so. ACC, Grasim, HCL are some of the other losers to the tune of about 1%. Let's look at some of the broader market gainers. There was a lot of action there. IBREL, we just spoke about that to Gaurav Bisa. Castrol, we just spoke before the real estate pack was up 6%. Equitas Holding, that's a new listing. May not be that much in terms of pricing action. Okay, towards the end, even price improved. So volumes were good throughout the day. Pricing is up about 4%. I think it's got to do with the SKS numbers as well. RDEL was up about 3.5 odd percent, earlier known as Pipavav Defense. DLF from the real estate pack did very, very well. Crompton Greaves also did well. Since morning, Crompton was doing well with good volumes. Just wanted to highlight two managements that you heard in the morning. V-Guard was up 20%, a full 20% up for V-Guard. And Nucleus Software was up about 6 odd percent. We heard both the management today morning about their results and what's essentially happening over there. Mayuresh as well as Gaurav Bisa are still with us. Mayuresh, what's your view on the real estate pack? Doing very well, and people probably want to own this name now.
Again, I think I'll be a little bit skeptical even at this point of time. A lot has happened in terms of developments to the sector as a whole. The real estate bill has come through, and again, if some sections are coming through even at this point of time, once the bill is fully implemented, I think you're going to have some amount of issues, specifically kind of escrow deposits that the builders have to do. Secondly, I think the core performance has not improved drastically, right? So the pre-sales are still very, very weak. You've got high amounts of inventory. So all the issues that were related to the real estate sector, which probably had dampened their cash flows, the kind of debt they had taken on the books, were taking a hit on their bottom line. I think all that still persists at this point of time. So I'm not seeing a cyclical recovery in demand coming through, specifically in Tier 1, Tier 2 cities. With affordable housing and the government focus, yes, I think the larger picture looks much better. But it looks much better for the picture for the players who are probably giving this segment to the end buyer. So again, I think one needs to be extremely selective. At this point of time, I think the better way of playing this would be through housing finance companies, in my opinion.
Right. So, as you said, that debt is one of the issues. Some companies like Oberoi, Godrej Property have very low debt. Would you want to go with them, or, even they are not that safe?
Again, I think if you look at the players operating out of Western India, I think if you look at the stamp registration data, I think it has not improved meaningfully quarter on quarter, year on year. So I think the kind of growth that one really expects to assume that the real estate sector is probably again in the pink of health, I think you're not expected to see that happen at least for the next few quarters as well. Again, I think the operational performance for both these players was a little bit on the softer side. And again, I think that entire trend in terms of soft earnings, in my opinion, would continue at least for a couple of quarters. So again, I think the better way, as I said, for playing this sector would be through housing finance companies. What happens once the bill is implemented again? I think it is going to have some amount of issues in terms of cash flows for the companies going ahead, and in turn impact the return ratios as well.
Right. So, as far as real estate is concerned, you mentioned that there were other ways to play as well. Housing finance companies, there you think valuations are particularly quite high to play this story?
So one really needs to understand the kind of mix within the housing finance pack as well. Who's catering to the retail side, who's catering to the loan against property side, who's catering to the developer side of the market. If a cyclical recovery does happen, I think the stress that you're probably seeing from the LAP and the developer market would start reducing down. But generally, I think the advances specifically on the retail side would assume to be growing at a very good pace, and I think that assumption would still hold good over the next 2 years in excess of 20-21% generally for players operating within this space. I think what this entails specifically, Pankaj, is that the earnings growth can be in excess of 20% and the cost to income ratios are pretty low as well for a lot of these companies. So credit costs expected to come down, the cost of borrowing expected to come down with RBI cutting rates. If that happens, I think greater transmission seen in advances. If advances happen at a much faster pace, my own take is that the earnings growth of 20-20% can be easily sustainable by these HFCs.
Right. Gaurav, what will be your view on a company like HDFC? It has done very well after the results. It's up 7% in the last 2 days.
Levels of, let's say, around 1180 to 1200. This is the zone from where we have seen some amount of pressure coming in the previous occasions as well. Some amount of unwinding cannot be ruled out. And if at all, if we continues to hover around 7,700. And these are some of the stocks that will see some amount of profit booking because to anticipate a fall in the market or anticipate a fall in a particular stock would be a little bit difficult at these levels. These are not the levels from where one can either go aggressively long or short. And that comes to the next point where one can have a profit booking. So if somebody is having a decent amount of portion in HDFC Bank or some of the other banks, the lower levels, then I think they will see some more pressure in coming days.
Right. How would you look at some of the other housing finance companies? Maybe a LIC Housing where the trading interest is quite high?
It's given a breakdown. It's seeing good amount of short positions. So I would recommend going short in the stock, but a little bit at high levels around 450. One can have a short in the stock, have a stop loss of 460, play for targets of 435 to 430. I would still be skeptical about it. SKS after the result, it's been a little bit stable. So if it's seeing a 585 levels even after a couple of days, then I think the buying interest would still emerge and we may see levels of 630, 640. So I think if tomorrow the stock closes on the positive note, one can go ahead and buy a 620 or 640 strike call option. That would make sense for entering into HFC names.
Right. Mayuresh, what's your view on United Phosphorus Limited? It has done extremely well after results.
I was very optimistic on the stock for a long period of time, and again I think the story holds good for a player like UPL, completely integrated in terms of front to back end operations, expectations of generic products of close to $3 to $4 billion going off patent over the next few years. What this really entails is top line growth of around 10 to 12% on a CAGR basis over the next 2 years, bottom line growth of 30 to 15%, and that should probably sustain. Now what will happen going forward will be the kind of capex that these guys do, and if these capex plans are much larger than what we really expect at this point of time, that might have some amount of dampening effect from a short to medium term perspective. However, I think the results were extremely encouraging in my opinion, and the general business outlook looks extremely robust for a company like UPL.
Because it has seen such a sharp rally, you would want to wait for a correction before you advise somebody to buy into?
So again, Pankaj, I think we did like the stock at much lower levels. I think it has moved up quite sharply over the past few months. So again, valuations have become a little bit on the higher side if you have a trailing comparison done. So largely, I think it will now depend on what kind of plans the management has in place. I think the business model is largely understood by the market, and the kind of opportunity that a stock like UPL can probably garner in terms of market share from innovators who specifically have some of their products going off patent, as I mentioned earlier. However, I think valuations will be a little bit of a headwind from a medium-term perspective perspective. So yes, I think fresh investments need significant declines, but investors holding onto the stock should continue.
Right. Mayuresh, thank you so much for taking out time for us. Always a pleasure talking to you. Gaurav, your view on United Phosphorus Limited. How do you see that name, the rally that it has seen? Can it continue?